You've been learning about value investing, finance, just regular investment for a while now, but you don't know where to go next. You're getting confused about the vast amount of information on the internet. You don't want to waste your time on crap information. You want good information and reliable information. In this series of videos on value investing and finance education, you will find those answers to those questions and much more. My name is Jason Rivera. Welcome to Value Investing and Finance Education.
Hey, Jason here. Today I want to talk about capital allocation some more. We've been talking about it quite a bit on the blog, whether it is return on invested capital or actually capital allocation, but I don't think I've ever really explained what my definition is of capital allocation, what it is not, and why it's so important, why I've been talking about it so much lately. Capital allocation is taking your investment capital, whether it's time, whether it's actual capital like money or cash or debt or stock, your resources, whatever they are, investing them at the highest rate of return, safest, highest, and best rate of return. So what does that mean specifically? That means, for example, how to use your time. Time is a resource. How do you use your time? Do you use your time watching TV shows, movies, sports? Do you spend your time learning? Are you getting a return? Are you getting a high return if you are watching things like sports and TV shows? Are you getting a high entertainment return in terms of value? Whatever you value, again, this is personally up to you. Whatever it is. Are you getting high entertainment value out of that? Or do you get a higher return? Again, you have to decide what the return is. Are you getting a higher return by learning? Years ago was the year, I think, Sons of Anarchy, Justified, and Breaking Bad all ended. Around that time frame, within a year or two time frame. 3 fantastic TV shows. Breaking Bad is my favorite TV show ever. After that, I literally told my wife, I was like, this series is so good, I'm not probably going to watch very much TV anymore because it's so good. Nothing's going to be able to compare to it. That's not the only reason I haven't watched TV anymore. No, I don't watch hardly any TV anymore, but my priorities have changed now. I spend most of my time learning, producing content, talking with clients, potential clients, or existing clients, strategizing about my businesses, hanging out with my family. That's what I spend the majority of my time doing now. So I've just changed my priorities a little bit. Again, there's nothing right or wrong with whatever you're doing. It's personally up to you, but that's an example of capital allocation in a real world sense. How do you use your resource that is time? Another one is investing. This is value investing, what we talk about all the time here. If I can invest in an asset that is going to give me a 5% return, but with comparable risk profiles, comparable in evaluation, I can invest in something that's going to give me a 15% return. I should invest in something that's going to give me 15% return. These kinds of things are capital allocation. Again, how you use your time, how you use your resources, whatever it is, time, capital, money, whatever the resource is, how well you use it. The best, highest, and safest return on your investment capital. Again, resources, time, whatever it is. That's what capital allocation is to me. And I look at this pretty much in all aspects of my life now is, and this is why I don't watch very many movies anymore unless they're Marvel movies. I don't watch hardly any TV anymore unless it's NFL season, and then Champions League soccer, World Cup soccer. That's pretty much the only TV I watch. Other than that, again, I'm spending my time reading because I have different priorities now. I want to grow my businesses. I want to become more successful. I want to make more money to help more people. I want to help more people. All these kind of things. So it has to do with your priorities, has to do with your mindset. A real world example with a company I'm advising. and this is where I go back and I talked in one of the videos about why you should view expenses as investments, is most people don't think this way, and they just do marketing or hire more salespeople or buy more inventory or do whatever without thinking about, should I even be doing this? That's the first question you should ask. Should I even be doing this at all? Should I be doing something else? Should I be even in this business arena, in this business industry? Should I try to change my business model? Am I in the most efficient business model? Should I invest in marketing and sales? Should I invest in operations? Should I buy an outside asset, a third-party company? Should I buy something like investment real estate? These are the kinds of things you need to think about as a value investor, entrepreneur, business owner, whatever. Should I, even be doing what I'm doing? If I'm doing it, what is my rate of return? How do I improve my rate of return? And what do I invest that excess capital into once I raise my rate of return? These all go into the mindset of capital allocation. And again, this goes all the way up to big companies. But it can go all the way down to everyday life as well. I pay my team, for example. One of the things I started a couple years ago is I started paying my team to delegate so I could have more time for strategizing and creating content and spending time with my family, stuff like that, because I valued those things more highly than the actual capital that was going out to my team. Again, in terms of time, I wanted more time. I wanted to spend more time with my kids. I wanted to be able to strategize more. Again, time. Because of that, my businesses have been growing a lot better, because I'm able to concentrate on things like this that I like doing. And again, this goes back to unique ability and doing stuff you like to do, and delegating and eliminating the other stuff you're not good at or don't want to do, which again, I talked about in another video. But in terms of capital allocation, that's also giving me more time, which I can now spend coaching my two oldest daughters' soccer teams. Pretty much year round, except for in the summer, because we live in Florida and it's stupidly hot in the summer, so nobody does anything outside. But that's given me time to help coach my two oldest daughters' soccer teams. Could I maybe get a higher quote-unquote return if I was to work those 6 to 10 hours a week? Possibly, probably over the long term, yes, almost guaranteed. But I wouldn't miss that time with my kids and seeing them grow, seeing them evolve. I get a huge emotional kick, I guess, boost, whatever you want to term it, out of that. I don't know, my screen keeps going in and out here, my focus. But I love doing that. I love spending time with my kids. I love spending time with the other kids and watching them grow and just seeing them over the seasons as they continue to improve and grow. It's just amazing to me. So I've traded my time, essentially, or my capital, being the money I pay my team, for time for myself, and I've changed that time into spending time and making memories with my kids and families that we're close with and friends and stuff like that we coach with, or that I coach with. So it's not always necessarily about how do I earn the highest rate of return in terms of money. You think about time. Time is super important, especially if you have kids or a family. Time is super important. Capital allocation is an incredibly complex subject that very few people in the world know anything about. The reason being is it's not necessarily a complex subject, but it's, once you get thinking about the different layers, there's massive amounts of complexity involved. Again, family, time, capital, all these things we're talking about. So what capital allocation, this is what capital allocation is on a deep level. This is what I advise people about, companies all over the world about. This is what I advise them about, how to make the highest, best use, safest return of their resources. Again, whether it's creating more time for them, whether it's creating more profitability in their company, whether it's cutting expenses, whether it's, again, investing in third-party assets like a real estate investment or internal operations like marketing, whatever it is. I try to figure out the best, highest, safest return for them. And that's frankly why it's such a complex, hard thing to do that very few people are good at, because they don't know what it is. If they do know what it is, they don't know how to do it properly. And if they do know what it is, they don't think about all these different layers of things, because they have to worry about the day-to-day operations of the business, staying healthy. Am I producing enough cash flow to make payroll? Am I producing enough cash flow to pay off our debt service? Am I producing enough cash flow so that I can take a vacation with my kids? These are real-world, everyday things that these CEOs have to think about. Leaving a legacy for my kids if they want to run the company, these kind of things. But these are CEOs, again, I mentioned this in a previous video, mostly come out of operations or marketing or finance, or they built the company from scratch, again, trying to survive day to day. They don't think about these kind of big picture strategic things because, again, they don't know anything about it, or they don't have the time to do it. So this is what I help these companies with. This is why capital allocation is so important. Again, I read a stat, that proper capital allocation, essentially capital allocators who do a great job at allocating capital properly, can more than 20x returns for a company over time. Not 20%, 20x. So that's how important capital allocation is, kind of from a numbers perspective. It can make massive differences in the fortunes of your company, yourself, your family life, versus misallocation of capital, which is essentially not proper capital allocation. So let's get to what capital allocation is not. It is not for investor relations. Frankly, I don't give a shit about investor relations. I don't care about impressing investors, analysts, that kind of stuff. It's about improving the long-term value of the company from an internal perspective, so the value of the company goes up like this over time. That's essentially what it is. It's not about IR. It's not about equity financing or debt financing. It's not about fudging the numbers. I just finished listening to the audiobook of Financial Shenanigans 25th anniversary. It's not about fudging the numbers and making your numbers look good even though they're not really good. It's about producing excess cash flow, earning the highest, safest, best return you can, producing excess cash flow, and then reinvesting that excess cash flow at the highest rate of return. And then building a snowball, building a virtuous cycle of ever more excess cash flow. This is exactly what Warren Buffett did. Bought businesses that produce excess cash flow that he could use to invest in other businesses. Then those businesses produce even more excess cash flow that he could use to invest, and the whole cycle went, and that's how he built Berkshire Hathaway essentially from zero to, I think, one of the 5 biggest companies in the world by market cap. 10 biggest companies in the world, certainly, by market cap. Is essentially this. This is what I'm hoping these companies do, begin doing as well, is trying to get this same cycle going for them to, again, compound the internal value of the company, so the value of the company goes up. They're happier. They have more time. The value of the company goes up, so they're richer. They can help more people. Their families are better off. There's less stress involved. All of these things. Again, we haven't even talked about systems or trading at all, which I talk a lot about these companies as well. Is creating time, creating excess cash flow, all this stuff goes together. Again, this is what I talk about in my presentations, is it's building a cycle, virtuous cycle, over and over and over, just to repeat itself until you are either big enough to sell the company and go public, sell the company to a third party for an enormous amount of money, pass that off to your kids, do whatever you want, all that kind of stuff. So that is what proper capital allocation is to me. Again, has nothing to do with investor relations, has nothing to do with fudging the numbers, has nothing to do with making people think you're a good-looking company, has focusing essentially at the beginning stages, focusing on your internal operations, making those great, and then investing your capital in other assets or internal operations or whatever to become even better. That is what proper capital allocation is to me, and that's why I've been talking about it so much lately, because it's so ultra important. Nobody talks about it. Warren Buffett talks about it. Michael Mabusin a little bit talks about it. Not many others. The book, The Outsiders, talks about it. That's about it. But it is ultra, ultra, ultra important. And again, you can apply it to everyday aspects of your life, not just business, not just value investing. So, I hope this has brought some great value to you on this important concept that pretty much, again, nobody talks about. And beginning to learn about capital allocation. Again, the more people that know about this kind of stuff, the better it is, because then people won't be doing AOL Time Warner mergers and destroying $150 billion worth of capital like that. They won't do acquisitions just to do acquisitions. They'll do acquisitions if it makes sense from a return on capital perspective. They won't do acquisitions for things like synergy and what are some others? To grow revenue. That's another one. It's actual based on real world profitability metrics. So again, I hope this brought you some great value. Hope this made a lot of sense. Love to hear your comments below, and have a great day. Talk soon. Bye.